I'm J.D Frost. Welcome to the Accountability Show. Got a little bit different look today because I've got a different setup. I'm on cardboard boxes and cameras on top. Anyways, the show must go on. But this is the Accountability Show. Thank you so much for tuning in. We are talking about the foundations of accounting in your business, and we're going through the how, what, why, and an example of all these different foundations that help you create a firm foundation of accounting in your business. So we've been talking about how to read cash flow statements, balance sheets, income statements, creating finance packages. But this week we are talking about budgeting and the how of budgeting. Don't forget to turn on your notifications and also like and share this post. Comment on this post if you have any questions. But budgeting is something that nobody really likes to talk about. It's not really the cool word. It's not really the cool thing to do. And most people think of budgets being limiting. I believe that budgets create freedom in your business, that they create discipline in your business and boundaries, which then will allow you to have more freedom, to know how to make decisions, and to understand how to control the finances and the cash that's flowing through your business even more. Allows you to make better decisions, more calculated decisions. And what a lot of entrepreneurs I hear talk about, small business owners, refer to as calculated risk. So how do you put together a budget? The simplest way to put together a budget is to look at your P&L statement, your profit and loss statement, income statement from the prior months, prior years, prior tax return, whatever information you can get that's already happened before, and you want to put together a budget based off that information. So if you had revenue of $75,000 last month, and pretty much every single month you anticipate that you're going to collect $75,000, that would be your budgeted revenue number in which you would assess all of your expenses, all of your other investments, cash flow, debt payments, off of the fact that you're going to collect $75,000. So we're kind of walking through here how to create a budget. It's easier when you go off of past information. So once you see that past information, let's say that your expenses, you have in a category of marketing and you spent $10,365 last month, you will want to create a budget of $11,000 this month. And so on and so forth, all the way through all your different expense categories. If you don't understand what I'm talking about as far as income statement and expenses and revenue, you need to go back and watch that episode on the income statement on how to produce that. This is very important when you're producing this budget, the how of producing a budget. How do you do this? You want to have all of your accounts in one section on a spreadsheet. You want to have all of them in one column, then your budgeted amount based off your prior months, based off your prior years. You want to create a budget with round numbers. Round numbers, meaning if you spent $10,365 on marketing, that your budgeted amount is $11,000. Seems pretty simple, right? It is simple. It's just not easy to stick to a budget. It's just not easy to actually do this. I have on my to-do list this week to establish my October budget. I want to see what I'm going to predict this month's activity to be. So one thing that we have practiced, and we've been reading this book called Traction, one thing that we've practiced is not only budgeting, but also tracking a scorecard. And that's another conversation for another day, but a budget allows you to see what's going to happen in the future, predict, kind of project what you think is going to happen in that month, and then compare the actual to the budget so that you can see your progress and how you managed that budget. Now, this is not assuming that you have to limit yourself just to this spending. You might budget that you want to increase your marketing expense, but this budget will allow you to understand that if you only produce $75,000, and normally in order to increase the marketing expense, you've got to increase your revenue by $25,000, this will allow you to understand where you're going to have those differences. A lot of business is dependent, and a lot of the stock market and everybody's financials that are publicly traded companies, it's all based on the fact, can you set expectations in your business and can you meet those expectations? Let me say that again. A lot of successful business owners, as well as the publicly traded companies on the New York Stock Exchange, they are determining the price of those shares based off of the ability of the business to predict what it is going to do. It's going to predict what those expectations are and then meeting those expectations. So even if you expect a loss, might not be good for your stock price, but if you expect a loss and you hit that, that's good. That's great that you can predict your business, because banks, financiers, investors, anybody that wants to invest in your company, any way that you want to accumulate cash through a loan or anything, they want to invest in a business that can predict itself. See, budgets are perceived as limiting, but what they do is they allow you to practice this predictability in your business. The predictability in your business eliminates any risk. It actually is the way to create calculated risk and to make calculated risks. So the sooner that you start to practice budgeting, the sooner you will be able to predict your business. And the sooner you're able to predict your business, the easier it is to tell the story. And once you're able to tell the story, you can sell anybody anything in your business. You can raise whatever amount of capital that you want in your business, because you know that if you hit a mark, or if you set a mark, you will hit it. So how do you create a budget? We talked about that the importance of looking at prior numbers and understanding those numbers and how to create those expectations is extremely important, okay? So when you're creating this budget, you are creating this in order to give you more freedom in your company. It's a mindset shift. You want to create boundaries to create freedom. Doesn't seem to make sense, but it works. It totally works. And this allows you to create a business that has predictability. You want it to be concrete. You want to have a business that says, look, if I add 3 more people, that means I will pick up this many more clients. That means I'll serve this many more, create this many more tax returns, or prepare that many more tax returns, which means my profit is going to increase by this. It's so critically important for you to understand and start to create a business that is predictable, and budgeting will get you there. Thank you so much for tuning in to this episode, 27, I believe, of the Accountability Show. If you're listening to the podcast, please write a review on the podcast. Go to Spotify or iTunes in order to listen to the Daily Ledger podcast, because we put the audio of the Accountability Show on the Daily Ledger podcast as well as other things that we talk about on the podcast. So thank you so much for tuning in to the Accountability Show and learning more about budgeting. Turn on your notifications. Follow me on Instagram at jdfrost.today. Subscribe to this channel. Do everything you can to tell all of your friends about how you can use the Accountability Show to create a firm accounting foundation. Thank you so much.